What is up, everybody? We are back with the third co-stream between myself and CredibleCrypto. So I know all of you are very excited for this. The tweet about the third episode got a ton of engagement, and we keep doing these at seemingly the most opportune times. The last stream, just for reference here, guys, we did back in March of 2024. So we were just breaking that initial all-time high. The second stream we did was in October of 2024, when we were finally breaking out of that 7-month-long consolidation and pushing to 100K. So for a little bit of context for all of you guys, a little bit of clout collection for myself and Cred is, we were bullish. Absolutely, we were bullish near the bottom here on Bitcoin. We were bullish throughout this entire consolidation, consistently calling for 6-figure Bitcoin and the continuation of this high time frame uptrend that we are in. Now we're here. Bitcoin's traded as high as $123,000. It's 2025. We're a little over halfway through the year, and I'm sure the question many of you have is, how much time do we have left? As you guys know, I'm purely a price action trader. So a lot of what I do is based on what I can see in price, reacting at certain levels, taking trades based on that. Something that Cred does extremely well is Elliott waves, which gives him a bit more of a predictive ability, I would say, in terms of how high moves can go. He's also very good at time analysis. When are these moves going to happen? How long are these moves going to last? Using Elliott wave theory. And when we always get together, we seem to have a lot of fun. It seems to be great for you guys. You guys are always super stoked on the episodes. We've been pretty accurate so far. So the questions we're going to try and answer in this stream for you guys is, what's next? Is alt season started? Is that what we're seeing right now? How long do we have left in this bull cycle? Are we going to go on forever? What's the deal with these treasury companies? So lots of stuff to cover. We're going to give you guys our brief overview of the market to start. And then always, if you got questions, let us know in the chat. We're live on Twitter, we're live on YouTube, we're live on Twitch as well. So feel free to pepper us with some questions. We'll do our best to answer as many as they can. Without further ado, I'm going to bring on Cred here. Cred, your mic is hot. How's it going, man?
It's going well. Thanks for having me on, man.
Awesome. Can everyone hear Cred all right? Alts are dumping. You guys are on too low of a time frame, man. Why is the market crashing? These people are funny. Okay, it sounds like your mic is working. Perfect. So,
Perfect.
Welcome back, man. How have things been for you over the last 9 months that we've done this stream? I mean, Bitcoin's at 6 figures. Can you believe we're here?
Yeah, I mean, it's been wild. It's been crazy seeing it actually happen, but it's like, I guess it'd be more exciting if I wasn't expecting it and we weren't so confident in this happening months ago. It's kind of like almost like an inevitability that we're here now. And so while it is exciting, I guess I guess if I wasn't expecting it, yeah, I'd be a lot more excited right now. I think this is on course for what we've been expecting, and I don't think we're done yet. And I'm excited to see where this goes, because the one thing that I was confident in was 100K plus Bitcoin. The one thing that I'm not super confident in is where we're going to top. I just think that it's going to be somewhere under 300K, but that leaves us a lot of room for expansion here. And so I'm really excited to see where exactly this ends up.
I feel the same way, man. It's like when you create a plan and then you see it come to fruition, there's obviously that little bit of dopamine, you know. Obviously you make money if you're right. It feels good to see your analysis play out, you know, renews your confidence and your ability to predict things. But at least the way my brain works is once something comes through, then I'm like, what's next? And I think a lot of people are feeling the same way right now. Is we're at all-time high. We're in price discovery for Bitcoin. How high does this go? How long do we have left? So I'm looking at the monthly chart here on my screen, and this looks like we're just beginning, kind of a new parabolic price leg. Really, I mean, maybe on the lower time frames, there's a little bit more consolidation, but the high time frames look like we're about to expand again on the monthly chart, on the 3-month chart on Bitcoin. And I think a lot of people are wondering, how high can this rally go? And so for someone like me, I've been using prior cycles as a bit of a barometer, a bit of a guide. I've been using, the size of previous price legs, previous moves. What is Elliott Wave telling you here? And I'm going to bring over your chart so everyone can see it. In terms of, okay, we've broken out. We've made a new structural higher high. What are the projections looking like? I know you said 300K is kind of the max you can see this go. What's telling you that?
Sure. So basically with Elliott Wave, what we're doing is we're just identifying like different trends on different time frames. And so it sounds more complicated than it is, or I guess there's a lot of nuance to it, but at its core, all we're doing is identifying, uptrends on different time frames. And so the logic is simply that when you have an uptrend going, you expect it to continue until market structure is broken. Now, market structure obviously is like a relative term, and you get people that look at market structure on the hourly time frame. You get people that look at market structure on the daily time frame. You get people that look at it on the monthly time frame. And so when you talk about breaks in market structure, understanding what time frame you're referring to is really, really important. And a lot of people get caught up in these time frames because they see a break on the hourly or the 4-hourly, but the daily might remain bullish. And so they may flip bearish because of a lower time frame break. In reality, they should be bullish on the higher time frames because the higher time frames remain intact. And so with Elliott Wave, essentially what we've been talking about since like the bottom at 15K and before that the bottom at 3K is that we're looking for a series of like uptrending moves. And if you look at the bottom at 15K, we call these like 5-wave moves. And all that is, it's a series of a high, a low, a higher low, and a higher high, which by definition is an uptrend. So that's where we get the idea of a 5-wave move. Now, again, a lot of people make fun of Elliott Wave because they don't understand that all we're doing is identifying higher highs and higher lows, which make a trend, and we're calling it a 5-wave move, et cetera, et cetera. So once we get a 5-wave move, that essentially establishes an uptrend on a certain time frame. And then what we're looking for is a higher time frame, higher low, before continuation of another 5-wave move on the higher time frame. Once we get that, we look for another higher time frame low, and then another continuation of a 5-wave move on an even higher time frame. And that continues and continues and continues until we eventually peak, or we break this higher time frame structure. We break a higher time frame, higher low. And when that happens, the larger structure in its entirety is finally complete. So Elliott Wave told us that even back here when we locally topped at 109K, and we moved back down to like sub 90K, and everyone was getting bearish saying the cycle is over, it's the end. We stayed adamant that, as long as you don't go back below 50K, essentially, that's a higher time frame, higher low. And for a lot of people, that's hard to grasp because they're looking at this as a $30,000 correction. How can that not be bearish? How can that not be a break in market structure? How can you still be bullish? And again, this is where we have to look at the higher timeframes and understand that despite these lower timeframe breaks in structure, the higher timeframe remains intact, regardless of how deep this goes, unless it goes back below that higher timeframe, higher low that we set. So we got a higher timeframe, higher low here in the 70Ks. Again, we remain bullish. And then what did we see off of that level? Another 5-wave move, which again implies the start of the next uptrend. So now once again, unless we go back below 74K, it really doesn't matter what happens up here in terms of pullbacks. We expect continuation, and that will continue on until something changes and a higher time frame break occurs, which I don't think is going to happen for another few months at least, and much, much higher.
Yeah, so I think what Elliott Wave does really well, and I think it's something that people struggle with is it forces you to use multi-time frame analysis. I think people, I mean, we already had some people in the chat saying the market's dumping, and I'm like, Bitcoin's at $117,000. Like, on what time frame is it dumping? Because you might absolutely be right. On the 15-minute chart, we might be in a downtrend. But the issue I think a lot of people have, and something that Elliott Wave, and same with the type of price action charts that I look at, does really well, is it forces you to keep the lower time frame noise kind of within the context of the high time frame. There is going to be low time frame downtrends within a weekly bullish chart. There is going to be low time frame downtrends within a daily bullish chart. And what you do really well, and you usually draw it with like a red line, is like, hey guys, this is that high time frame level that we need to respect. So as much as the low time frame chart looks noisy right now, and it's going up, it's going down, it's going sideways, you always kind of have that, hey guys, this is our high time frame invalidation. And I do the same thing. When we had that 7-month consolidation after our first live stream together, after we just broke all-time high, I said, guys, love it or hate it, but we've got this weekly low way below price, and any sort of retracement into this leg is still technically bullish on the high time frame. I think people get so sucked in on the low time frame that they're like, well, that's a $15,000-$20,000 move down, and that completely in their mind is like, how can I remain bullish when price might retrace $30,000 from the high? It's like, well, because it might pump $70,000 after that to the upside. So I think if you guys take anything from price action from Elliott Wave, it's don't let the low time frame noise skew the high time frame trend, which has been adamantly bullish since the bottom years ago. There has been zero, not even really close to any sort of invalidation on these high time frame levels. So what you're saying right now is technically the high time frame level is $74,000. Now, I'm sure you and I would agree, I don't see price coming down to $74,000 before going higher, but in theory, that's as low as it can go while still remaining bullish high time frame.
Yeah, exactly. And another thing to keep in mind is that, like, while we have that as the like line in the sand invalidation, the reality is that depending on how bullish we are, most of the times in a very, very bullish environment, we shouldn't get anywhere even close to that 74K if momentum is as bullish as we expect. So like if we print a nice 5-wave impulse off at 74K, while that is technical invalidation, considering market context, again, like you can see the correction that followed that was a correction down to 98K, and then we impulsed again. So like with market context in mind, while we have our hard levels in the sand, based on market context, we know that maybe we shouldn't come even close to those levels, or if we do come closer to those levels, then maybe the market needs more time to consolidate and build up that base before we get the true expansion. And when we start seeing aggressive expansion and more sideways corrections, we know that we're entering kind of the next stage.
So for people who want to figure out a very easy way to do this, the invalidation level is the beginning of the new 5-wave impulse, right?
Exactly.
So for me, if you want to go to the weekly chart really quick, I use weekly structure, and it generally gives you the same level. Like to me, that 74K, that's the weekly high or low. Whereas before, I believe, if you go even further back, the weekly high or low was way down in like 25,000. So as much as we went all the way up to 72,000, it's like, well, hey, technically this can come all the way down here, and it's your job to effectively look for a retracement within this initial price impulse, this price leg, for a higher low to form. And so if you guys are trying to marry price action and Elliott Wave, what I do is I go on the high time frame and I say, what are the structure levels? Okay, as long as we're within this bullish structure, any sort of retrace, I'm looking for price action on the low time frame to give me a clue that it's becoming bullish again and that a higher low is getting placed. And what that looks like in Elliott Wave is a fresh 5-wave impulse. You see Cred talk about this all the time. It's probably one of the things you get asked about the most, I imagine, in your videos and on Twitter, is like, how do I identify that 5-wave impulse and I know when to get in? So maybe you want to show people this last higher low at 76,000. What was your clue? Like, okay, I think this is where the higher low is going to form. It's time to start getting bullish again.
Yeah, so this is like actually I've been wanting to make a video on this topic because it can be a little bit tricky sometimes. So in this case, we were pushing down, approaching this area of high time frame demand where I've said is like the best place for us to get a reversal, the best place to punt along because why? Because we know that we had our last 5 wave move off of 58K, clear 5 waves. That means that 58, 59K is the invalidation for this impulse. And so if we get down to this logical area of support and you have a stop loss right here and you're targeting new highs, it makes for a good risk to reward long. So the idea was let's have some bids ready for this green zone. Now what we did was we came back down to it. We barely front ran it, meaning we missed that green zone by a couple of $100, and then we saw pop to the upside. Now the thing is that just like the prior 2 or 3 pops to the upside here, you can see that they were eventually faded and we came back down and made lower lows. At this stage, it was tricky to know that this would eventually become a 5 wave move, right? It was too early to tell. We got a nice pop right above our area of demand, but the prior 2 or 3 had fully retraced. And so until we get technically a clear 5 wave moves, we can't confirm that the next uptrend has started because we could have gotten 1, 2, 3 and then completely melted back down here and visited the green zone. That was totally viable even here at $94,000. And so we have to kind of be cautious because in a corrective move, we get a lot of pumps to the upside that ultimately get fully retraced. And so there's a high likelihood that this move up could have been that until we put in a 5th wave here. That gave us, again, a series of higher highs and higher lows, aka an uptrend. And at that point, once we got the completed 5 waves, we have to agree that we did actually front run this high time frame demand, that we have started a new lower time frame uptrend, and that we are now looking for dips to buy.
Yeah, I think what Elliott Wave does so well is it gives you, and this is something I try to teach people as well with PAs, like you need to have a point where you can determine like, hey, my bias is now bullish and I'm now looking for longs, and it allows you to be honed in on only looking for bullish signs once those conditions are met. And so when you get that 5 way impulse, it should tell your monkey brain, it's like, hey, even though I might be seeing a low time frame correction here, I'm bullish. And I tell these guys the same thing all the time on my videos. We get that market structure break that we're looking for. Yes, price is pulling back now, but our bias is bullish and we have a clear invalidation. So we've got this 5 wave uptrend now. We're pushing above new highs. I think a lot of people are feeling FOMO. Now, I've said this in a bunch of videos and tweets. I'm pretty sure you've done a massive tweet thread on this where the risk reward on Bitcoin is no longer there, in my opinion. Now, I'm not saying you can't buy or trade Bitcoin and make money. Let's assume even conservatively, Bitcoin goes to 150K. I think that's your minimum target. That's something I was looking at as well. That's not that big of a move from here. And so I'm sure there's a lot of people going, okay, Bitcoin's at all-time high. Michael Saylor has created a derivative of a derivative of a derivative of a treasury product. All these other companies are now adding Bitcoin and other coins. Like, I want more exposure. And I've been telling people, like, I think now's the time. Like, if you're looking for those outsized gains, you can't be looking at Bitcoin anymore. It doesn't mean Bitcoin can't 2x, but the risk reward buying up here is, it doesn't really exist anymore, if that makes sense. And you got to kind of start looking at altcoins.
Yeah, I completely agree with that. And yeah, I've been like beating that drum for a while now. And we know that Bitcoin tends to lead out of bear markets into the bull, but we also know that after a certain amount of time, alts follow. And every single time that this happens, we're met with the same kind of distrust of altcoins, distrust of altcoin pumps. We have people saying that this time is different. Altcoins aren't going to pump this time because Bitcoin is being driven by treasuries, and that money won't rotate into altcoins. But, you know, what have we seen? XRP has just made new all-time highs a few days ago. We can see that Ethereum is obviously showing a lot of strength. Now the narrative is that, well, Ethereum is going to pump too because all of a sudden it went from being dead a couple of months ago to being fantastic. And so now Ethereum is going to make new highs. And pretty soon we're going to be hearing that about a lot of coins that people said would never make new highs. And so just like last time, just like in the last cycle, money rotates. People that made money on Bitcoin will want to rotate their money to alts and make money there too. And that's not going to change. Another thing I think that's kind of important to realize is that I understand that treasuries may be a lot of the demand that we're seeing up at these levels, these Bitcoin treasury companies that are absorbing, you know, tons and tons of Bitcoin. But you have to keep in mind that over 80%, or at least 80%, or even 70% of the Bitcoin in circulation is currently being held in wallets that have held for over a year and a half, if not longer, before these treasuries even existed. And those wallets absolutely take profits on the rises. We've seen it time and time again during impulsive Bitcoin price action above prior all-time highs that these entities tend to sell into the pumps and take profit. And so even if your Bitcoin treasury guys who are entering the market for the first time 6 to 12 months ago are not rotating, the other 80% of Bitcoin or 70% of Bitcoin that has been held by long-term holders are planning on rotating, just like they have been every other cycle. And so we don't need to rely on rotations from Bitcoin treasuries necessarily to drive alts up. There's a lot of Bitcoin being held by long-term holders that have held for years that will probably rotate. And that makes up a much larger chunk of the amount of profit that's being taken at these levels versus just Bitcoin treasuries. And so, yeah, I think the rotation game is going to happen like it does every cycle. And I do think that the gains are absolutely, at this point, better had in alts than in Bitcoin. Because like you said, Bitcoin, I think, may 2x from here. But a 2x is essentially like the equivalent of something like CRV going from 35 cents to 70 cents. You know, that's going to happen in a matter of days. It already happened. It's trading at $1. So like you can literally outperform the entire rest of the Bitcoin cycle by getting in an alt that's close to the ground, that hasn't yet moved up much off its bear market lows, that has strong fundamentals that you're confident in. You can probably outperform Bitcoin within a week for what Bitcoin may do for the rest of the cycle. So yeah, the opportunity is absolutely in alts right now. And just one more little note. I wanted to touch on the last thing that we talked about, the 5-wave impulses. I meant to say this, but I forgot. The example that we gave of the 5-wave impulse off of 74K, like I said, you wouldn't have known that this was a completed 5-wave move until we hit 100K, and then you're looking for a pullback. And that is a $25,000 move, but it's not always the case that it's unclear like this. We had a move back here when Bitcoin was at right here, was at 40 or 25K too, but at 40K. And back here, we identified the 5-wave move off of 40K right here. And that was just $5,000 off the bottom. We looked to buy here, and then we rode up the move all the way till 70K plus. So it's not necessarily that you're going to have to wait for a $10,000 to $20,000 move to get positioned. But it is the case that sometimes you simply do. You know, sometimes you do have to wait a little bit longer for that confirmation. Sometimes you have to wait a lot less long. So just wanted to point that out in addition to the last thing. But yeah, as for alts and Bitcoin, absolutely, I have no interest in buying Bitcoin here except if it's for a trade. Other than that, all my spot funds are going into alts.
Now, a lot of people love the term alt season, right? I mean, we've finally seen Bitcoin dominance put in a seriously bearish candle, what seems like the first time in a while. Now, someone I actually really like following is Ben Cohen. And he's been pretty bang on with his analysis of Bitcoin dominance. Now, he's of the belief that this might not be topped yet. That right now what we're seeing is just one of those rotations where Bitcoin's cooling off. He still thinks there's a world where we have another move up on Bitcoin dominance. Maybe it's into the fall, and then that alt BTCs make another lower low, and then we get that final rotation. He thinks this might be driven simply by, ETH BTC being strong. A lot of altcoins are still bleeding versus ETH. Do you have any thoughts on that? Like, do you think Bitcoin dominance is topped, or do you still think that there's a chance that Bitcoin dominance makes another high?
Yeah, it's a great question. And yeah, it's a great question. So on Bitcoin dominance, I've pulled up the chart here, and the idea that we shared back, months ago in August of 2022 was that dominance has probably bottomed in the blue region and that we're headed for a rally to 50% plus dominance. And this was back before this move from, before the move from 15K. Yeah, before the move from 15K had begun. And basically we were calling for that final fifth wave, which we're now in. And that sort of impulsive price action on Bitcoin tends to send Bitcoin dominance to the upside. And because we expect these last waves, we call them the fifth waves, to be the strongest, we expected a massive spike in dominance. Now, we've gotten that, and we've reached pretty high. We're now trading at around 60% Bitcoin dominance. The question is this the top? Has the top already been put in, or can we make another higher high? And it's interesting. I think that we could make another higher high here, because at the end of the day, we know that the most aggressive part of the Bitcoin rise is going to be during that blow off top, that parabolic ascent, which we're probably approaching pretty soon now in the coming months. So during that parabolic advance, obviously Bitcoin is running like insanely, and everything else kind of takes a pause for a second as Bitcoin goes nuts, and then we see the rotation after Bitcoin is topped. So I do think that we'll see a spike in dominance. However, we saw something similar in, I want to say 2017. I believe that Bitcoin topped right here. Like this spike in dominance was Bitcoin's parabolic rise. And then we saw this massive drop as money flowed into altcoins. And you'll notice here that like, despite Bitcoin's parabolic rise, we failed to make a higher high above this level here. And that was, again, in 2017. So we had a massive, massive alt season with Bitcoin dominance dropping from like 95% down to 30%. So I think two scenarios are possible, and I wouldn't rule either out. I think that we could see a bleed in dominance here as altcoins start to catch up to Bitcoin. And then as Bitcoin goes parabolic, we may see a spike in dominance again, which may or may not clear these highs. I'm not sure if it will. It certainly could, but it also may not, depending on how low Bitcoin dominance falls before that final blow off top. And then once we get that blow off top, again, I expect Bitcoin dominance to crater. And I've said for 5 years now that I don't expect that the cycle will end until Bitcoin dominance makes new lows below 35%. And the move from where we are now at 60% down to sub 35% is going to be that massive alt season, the one that everyone's kind of been waiting for. And just for some context, we saw a move down from 73% dominance down to 39% dominance in 2021. And again, this, in my opinion, was mid-cycle. The last cycle top, in my opinion, was in 2017. So we already saw a massive drop in dominance from 70+% down to 40%. There's no doubt in my mind that this next drop in dominance, this final blow off top and end to this cycle that's been going on for years, will send dominance below that 38% and below the all-time lows of 35% in what will be essentially the biggest alt season that we've seen since 2017.
So, I mean, guys, if you need to take anything from that, biggest alt season still yet to come. And this is why, you know, I kind of prefaced this original question with, you know, Bitcoin's risk reward isn't there anymore. And it doesn't mean you can't make money on Bitcoin. It doesn't mean Bitcoin's going to go higher. It doesn't mean you need to sell your Bitcoin. But if you're someone who is trying to make a cycle's worth of returns in the next 6 months, it's going to come from altcoins. And the fact that, you know, I see some people in the chat, altcoins are dead, they're dying, like they're still low. That's a good thing. The fact that so many of these altcoins are still at like cycle low levels relatively, yeah, maybe they've pumped 100 or 200%, but they're still in those bottoming accumulation ranges. It means there's so much opportunity and money still to be made. The craziest part of the cycle is generally the end. It's when Bitcoin goes parabolic and then we have that massive alt season. So that's something that all of you listening here should be very excited about. This is something that Cred and I talked about in our past 2 previous streams. Was back then, Bitcoin was still dominating. We're now starting to see the signs of, hey, Bitcoin has begun that final parabolic rise and we all know what comes after. Now, something interesting here, and I want to get your take on it, is there's 2 real main things here. Number one is this dispersion that we've now seen amongst alts. There's so many altcoins thanks to things like Pump Fund, Bonk Fund, all of the other launch pads, where in prior cycles we didn't have that. We had hundreds of altcoins. Now we have tens of thousands. So in terms of money flow, and this also leads into my second question, you know, is there more money in the system now and it's going to be dispersed amongst this many more alts? Or is there a chance that, hey, there's only so much money here and it can only go to so many alts? And the second part of that question is, with the treasury and the ETFs now, I would say that the money flow in crypto has changed a little bit structurally. We now have money in seemingly really strong hands within ETFs, within companies. Where are we going to see that exact same trickle down? Now, I know you said 80% of the money is still, you know, within the system. I think I don't want to put too much weight on being like, hey, you know, some company's got a treasury of Ethereum or Solana, and that means that it's never going to trickle down to other alts. But there has been some structural changes to the way people are now interacting with crypto, where that crypto is being held. And now there's just so many more coins. There's thousands of coins being made every single day. Do you think that changes what alt season looks like? Like, do people just have to be more selective, or is everything going to go?
Yeah, so I definitely think it changes something. What will it change and how will it change is harder to say. I think that the important thing that we need to, a few important points that you need to keep in mind is that yes, there are 10,000 more altcoins, and a lot of them are going to go to zero. Period. But there's also a ton more money in the system, right? So whatever there was in 2017, I don't remember what our market cap was when we topped. I want to say somewhere slightly above 1 trillion, if I'm not mistaken. But whatever there was in 2017, we're going to be hitting 5 to 10x that in total market cap by the end of the cycle. And so if there was $1 trillion in the system back in 2017, and there's 10 trillion in the system now, it's going to make a difference, right? There's a lot more coins, there's a lot more money. So, and the other thing is that everything doesn't need to pump at the same time. So money that goes into one altcoin, like let's say out of the 10 trillion, 2 trillion finds its way into 20, 30 altcoins, those can pump and then that money can come out and it can rotate to something else. So everything doesn't need a pump at once. Money will rotate across sectors probably, or across hot like niches, like just like it did in the past. And it doesn't all have to happen instantly. Like I looked at the other day the total market cap for 2017, and Bitcoin topped I think sometime in December, and then within 3 weeks after that, the total market cap topped because we saw the alt season follow Bitcoin's top, and so total market cap continued to rise after Bitcoin top for about 3 weeks, and it increased by about, if I'm not mistaken, 40 to 50% in those 3 weeks. And then we saw a collapse across the board. So essentially, what that told us was that after Bitcoin tops, there was about a 3 week window, 3 or 4 week window where alts kind of went bananas. And the total market cap then increased by 40 to 50% after, if I'm not mistaken. And then everything came crashing down. So in this particular scenario now, with 10,000 more coins and a lot more money flowing around, maybe it doesn't take 2 to 3 weeks for this alt season. Maybe it takes 4 to 5. Maybe it takes 6 to 7. Maybe the alt season that follows Bitcoin's top is more prolonged. But however it changes, the reason that the key thing to remember is, yeah, not everything will pump, but I do think that those coins that have some sort of fundamental value or some reason to pump, you can say, besides attention, I think those are safer bets. And I think that at this point, I think it's pretty much well established that people around the world feel that Bitcoin has some sort of value, right? We've hit 100K plus. We're seeing Bitcoin treasury companies absorb this stuff. A bunch of companies that never would have looked at Bitcoin are now looking at it. Clearly, it has more credibility than it did in the last cycle. And for that reason alone, I think that once Bitcoin gets those astronomical values and starts to top, there will be entities that will be looking at other altcoins that have some other sort of intrinsic value, that they believe has some other intrinsic value for them to invest in as like the next Bitcoin, right? Now, if you have a random altcoin that was created on Pump Fund a week ago, there's a good chance it's not going to be noticed amongst a sea of 10,000 other alts. Maybe it will, and maybe it'll get some sort of pump. But what you can guarantee will be noticed is a coin that actually provides some sort of value, right? If people are looking for the next Bitcoin, the next thing that has some sort of value, there's a million alts, but there's maybe 1,000 or 100 or 500 tokens that actually do something, that actually have some sort of fundamental premise or value. And I think that attention will then shift to those coins. And that's why I personally prefer to hold coins with some sort of a fundamental thesis in my long-term portfolio rather than rolling the dice on an alt that may or may not get noticed amongst a sea of 10,000 others.
Sorry, guys, I was muted there. I apologize. I completely agree with what you're saying here. I think what's going to be very difficult for this participants, kind of cycles participants, is going to be selection between alts. Because to your point, there are coins that are making all-time highs that are being talked about, you know, being used for stable coin stuff. You got coins like XRP, you got coins like CRV, where I think from an institutional perspective, they might see value in holding something like that, which means money might flow there. Where it might not flow is your derivative of a dog coin that got launched on Pump Fund and went to, you know, 500 mil and then just died when, you know, everyone sold and extracted all the value. So with that, it leads me into my next question, and then I think people maybe want to see some charts and predictions and, you know, how they can get involved in some of this stuff. Is what do you think is the catalyst for this market cycle's top? Now, last cycle we had, you know, some crazy DeFi stuff, some crazy kind of NFT craze, the news talking about us, Elon going on SNL talking about Dogecoin. Every cycle, the top signals from last cycle don't seem as crazy. Elon can't even move the market anymore when he tweets a meme about Doge, right? I personally, and this is completely, you know, conjecture, I think there's a world where some company adds something truly ridiculous as a treasury asset, and that might be the mania that, you know, is the beginning of the end. And what I mean by that is I think this treasury system that we're seeing where people are trying to replicate MicroStrategy, I do think that this might be the systemic risk event that creates the next top, but I don't think we're there yet. I still think we're relatively early and it can get way crazier, but I could totally see a company adding, you know, a ridiculous altcoin to their treasury being the top cycle, and, you know, that's the death knell for the market. What do you think about that?
Yeah, you know, I think this cycle has already had so many crazy things happen. Like it's insane the way this market is going, and if it wasn't for the technical analysis, I probably would have expected a top a lot sooner with how crazy things are getting. But yeah, I think that this treasury company thing, I think you're totally right. Like there's like no doubt in my mind that we're going to get treasuries of some ridiculous coins at some point in this cycle before it ends.
Like a FARTCOIN treasury. Like, come on, imagine a company that's like traded on the S&P 500 or something, or like a publicly traded company adds FARTCOIN to the treasury. Would just be such a hilarious headline in hindsight.
Absolutely. I mean, it's, you know, I saw a clip the other day on Twitter. I don't know where it was, but essentially it was some guy talking about how they're starting up all these treasury companies with all these, essentially like the original treasury company by Saylor. Everyone's trying to replicate it now. And the bad thing is that a lot of potentially bad actors have realized that this is a way that they can make a lot of money on the backs of people that are trying to chase the hype of the MicroStrategy game plan. And so you have these treasury companies being created, and I'm sure that some of them are solely being created to extract value by the guys that are creating them from the general public, creating a treasury company of some random asset, some random ridiculous asset, and then having the stock price of this company pump like mad because of that, and then selling into that pump on what is essentially, you know, a worthless asset. And so I think it's going to get crazy because people realize that there's money to be made in creating these sort of treasury companies and getting in on them early. And so I don't think it's going to stop at Bitcoin and Ethereum and XRP and BNB and whatever else is coming. I think it's going to extend into these ridiculous coins for as long as it can, because people see that as a way to extract more money out of the system. And eventually that's not sustainable. I mean, I don't even think that the MicroStrategy thing is sustainable long term, but eventually with these altcoin copycats, I mean, it's going to implode at some point. And yeah, it would not surprise me if that does either mark our top or mark very close to it.
So I think, like, even with the MicroStrategy, his newest product is called Stretch. And like that feels like what he's doing at this point. Like he's levered on levered on levered on levered. And I know we're trading at 120K or 117, 118. But like his average buy price is not that far below where we are. Like, oh, it's $50,000 below. It's like, yeah, Bitcoin can dump $50,000. Like, especially if the market tops and the stock market tops and all that kind of stuff. So we talked about a lot of high level stuff. I think what people want to know now is, let's get into some kind of game planning. Like if you're sidelined, what are you doing right now? I know a lot of people, because of Twitter and social media, and I always tell people this, I'm like, you got to ignore social media because everyone's going to make you feel like you've already missed out and it's too late. This is your last chance to get in. When I think you and I think actually we're coming into a period of fantastic opportunity and it's absolutely time to start paying attention, and there's going to be tons of opportunity to make money. But people want to know what that is. And I think it helps people remove some of that FOMO when they don't, they feel like there's still time. And I think, if you're on Twitter, Bitcoin's already 120K. I'm not full port long. What the hell do I do? What are your thoughts? Let's maybe start with Bitcoin and then we can go into some altcoins. If you're sidelined, what are you looking at in terms of scenarios to say, hey, I want to, if this happens, I'm down to go risk on. I'd be looking to bid Bitcoin here, stuff like that.
Sure. So yeah, I think it's still early, and actually, it's funny. I met with a friend probably about a month ago, and I was talking. He's never delved into crypto. He never touched it. He never messed with it. But obviously, he heard about Bitcoin, and the guy is pretty wealthy, and he has his own companies. And he was like, "Well, I'm too late, right?" And I was like, "No, like you're not too late. In fact, you you lucky son of a gun, you got to skip the 7 years of waiting that I had to do, and you get to jump in on these altcoins at their market bottoms without having to wait for the rise. Whereas I've been waiting patiently for years. You get to skip all that and jump in now, and it's definitely not too late for altcoins. I'd say for Bitcoin, in terms of buying spot, yeah, I wouldn't be buying it here. I think it's a little bit late for that. Time to buy Bitcoin was sub 20K, either in 2018 at 3K or more recently when it was trading at 15K. But for altcoins, because they run after Bitcoin, because they are laggards when we transition from a bear to a bull, you are fortunate enough for most altcoins to be able to get in right now at what are essentially rock bottom prices. And we always hear people talk about how these VC coins are unfair. Everyone gets in at the bottom and it's not fair for retail. We never get a chance to buy the bottom. And it's like, folks, you're getting the chance right now to buy the bottom of plenty of altcoins here. You just have to do a little bit of research to have that confidence to pull the trigger, and you're going to be getting in at incredible value, like relative to what we could be at. And so with Bitcoin, like I said, not really an area of interest where I'd be looking to buy, but you have a coin like CRV, and when it's trading at 93 cents and the old high is $7 and the low was at 21 cents, I've been telling people again and again and again, don't pinch pennies at these levels to buy spot. Like, people are asking me hey, I wanted to deploy this money. I haven't gotten positioned yet, but I want to buy some CRV. Do you think it's going to go down to 80 cents? And I'm like, bro, it doesn't matter if it goes down to 80 cents. Just buy the damn thing, because 10 cents of a difference here at 90 cents versus 80 cents when it's going to $7 doesn't matter. What does matter is that you get positioned now, so you don't have to, worry about getting positioned when it's at $2 or $3, like many people will. And so for a lot of alts, kind of the way that I would say is, if it's down 90% from the highs and it has fundamental value enough so that you're confident with holding it for the rest of the cycle, then forget about, getting that perfect entry. Just get in, establish a position, and worry about the people that should be worrying about the perfect entries are people that are active traders like me and you, where we're trading on leverage or margin and we have specific amount that we're trying to risk and we have key levels of invalidation. That's who should be worrying about getting that perfect entry, because for us, it matters a lot more. But for those that are just buying spot, if the coin is still down 90%, and of course it has some sort of fundamental value that makes you confident enough to buy it, then don't worry about getting that perfect entry. Just get exposure, because once you get exposure, to begin with, that feeling of FOMO that messes up so many of the decisions that we make, that feeling goes away when you have some level of exposure, or at least it gets less, right? Like, if you have zero exposure, you're probably FOMOing at every 5 to 10% move to the upside on whatever coin you're looking at. If you already have 50, 60, 70% exposure and you have at least a starter position, then it's a lot easier to make rational decisions when you deploy the rest. So just get a damn position in the coin if it's still down 80 to 90%. It's not going to last forever. And don't worry about the lower time frame fluctuations. Leave that up to the actual traders.
Yeah, I always tell people leverage requires precision, right? You don't have nearly the same requirement for precision when you're buying spot, because there is no liquidation. like obviously, you know, like the coin could go to zero, anything can happen, but it's not the same where it's like, okay, I've got to buy, you know, at exactly 80 cents. And then if it goes down to, you know, 60 cents, I blow up and I'm liquidated. If it's at 90 cents and you think the potential upside is $5, okay, it goes down to 75 cents. You buy a little more. Obviously, you still have to use analysis. You still have to have points of invalidation, but that need to be precise and exact with your entry is much, much less. And I completely agree, guys. Like right now, what I'm looking at is Bitcoin is going sideways. If it breaks up from here, it's going to drag everything up with it. If Bitcoin decides it's not quite ready to go, we get, you know, a flush down to 112, 111, something like that. That's going to be a really good opportunity if you're trying to be a little bit more precise to buy in on, you know, a low time frame discount on some of these altcoins. But a lot of these altcoins have put in weekly higher lows. So if you look at CRV on the weekly, I was posting about this at about 40 to 50 cents. I said, guys, this thing's putting in a weekly higher low right around 35, 40 cents. And now it's putting in another weekly structure break. So at a minimum, I think this thing is going to make a new weekly higher high. That puts it at $1.50. I obviously think it's going much higher than that. Would you like to buy this closer to 50 cents than where it is now? Of course. If this thing comes back to 75 cents, is that a better entry than right now? For sure. But a lot of these coins are still just in the process of shifting the highest time frame market structure, which means even though it's up from 40 cents to 90 cents in the last, you know, month and a half, in terms of the monthly chart, this thing is still just beginning its move. And there's a ton of altcoins that look exactly like CRV. There's a ton of altcoins that haven't even pushed up as much as CRV yet, but they formed the same structure. There's coins that look like CRV did back in March and April right now. So if you're saying, oh, CRV's up too much from the bottom, I don't want to buy it. There's coins that look like CRV did before it pumped 100%. And it's your job to build that watch list and go through and realize like a lot of these coins are structurally starting to put in higher lows on the most important time frames, the monthly and the weekly chart. And there's tons and tons and tons of opportunities here for you to still make money on these coins, and you don't have to worry about being super dialed on your entry because the upside potential on a lot of these is pretty crazy. It's still risk reward, guys. Like if you're buying CRV at $1 and you think it goes to $5, it's a 5 to 1. If you bought it at 80 cents or $1, that's irrelevant once it goes to 5, which is, you know, Cred's point here. So don't worry about being so precise. I think a lot of people are going to get left in the lurch hoping that CRV comes back to 60 cents before it goes higher. It could, but what happens if it doesn't? What are you going to do then? And I think just starting to build that exposure in coins that you like and believe structurally look good on the highest time frames is going to help you guys out a lot, because then you've got a little bit of skin in the game and that itch to do something stupid kind of gets scratched a little bit. Awesome. So I completely agree. I mean, I think that this is a super exciting time to be focused on crypto. Now, seasonality wise, I won't lie, I definitely thought that the summer was going to be more chill. Generally, the summers haven't been that crazy for crypto. They've been, you know, kind of choppy, sideways. And then I thought Q3, Q4 was going to be this kind of, you know, parabolic advance and then the blow off top. Now, my prediction is that we see, you know, 150 to 200K Bitcoin at least. But I still am of the belief that this thing could come to an end, you know, Q4, Q1 of 2026. Timeline wise, where are you looking? Are you still kind of tracking that for a cycle top, or do you think this can extend well into 2026?
Yes, that's a great question, and I get the question a lot lately. Like, are we going to be wrapped up by the end of the year? Are we going to push past that? And yeah, I've mainly been saying like we're going to have to wait and see, because I've made estimations on time before, and frankly, like we've taken longer than I would have expected already. I think, like you mentioned as well, I would have expected us to have gone parabolic by now, but the consolidations that have happened have taken longer. We saw a 8-month consolidation at 70K, and I wasn't expecting that to take 8 months. It did. We then saw like a 3 to 4 month consolidation here at from 106K down to 76K for that next correction. And again, these consolidations are taking longer than I would have expected. And so I'm essentially refraining from giving quotes on time now because it's clear that these consolidations are taking longer. However, and I will stick by this because I think this is kind of the most important takeaway. At this stage of the market, if it takes longer, it simply means we're going higher, right? So like the longer that we take during these consolidations to kind of base out before the next leg, the higher the next leg can go, because we have a longer amount of consolidation where money changes from hands that want to sell it to hands that don't want to sell it. And that's what we see, what we call reaccumulation. And the more of the supply that's concentrated in hands that are strong hands or diamond hands, the less sell pressure we have as we go up, and the more explosive the move is when demand comes in. And so if it takes longer, it shouldn't really be a concern. The only concern is, of course, in my head, is taxes by the end of the year. Will we be able to wrap up before that? Will I have a bunch of taxable gains at the end of the year, or can I push that out to the next year by holding off on sales? And unfortunately, it's just not clear to me at this point in time, because for all intents and purposes, I still think the most aggressive part of the cycle is to come, and we can take longer than a few months for that to happen. Again, the longer that we take, the higher that we go. So it really doesn't matter to me whether we wrap up by the end of this year or not. And what I'll also say, and I think this is also a very important point, is that as we go parabolic, the whole idea of a parabolic advance is that it gets steeper and more aggressive as we push into it. And so any of these rises that we've seen leading up to this parabolic advance, the rate of ascent moving forward should be even faster. So if we had, for example, a monthly candle already, like this monthly candle that went from 67K to 90 to 100K, that's a $33,000 monthly candle. The monthly candles that we see moving forward could be even larger than that. So what I'm trying to say is we could get a monthly candle that's $50,000, $60,000 to the upside. And if we're not going higher than 300K, which is what I think is kind of like the max limit, then that means that we could wrap this up in 2 to 3 months, right? Like if the expansion starts and these consolidations shorten, and again, we expect the momentum to get stronger and stronger till the end, then we could have two monthly candles that are 60, 70K each, and that could push us up $150,000, and we could be at 250K within 3 months. And that could certainly happen. But again, it's like if we take longer, we're just going higher. So I think it could certainly wrap up by the end of the year, but I don't want to start putting, like, I wouldn't bet on it. I wouldn't throw money on the board saying this will wrap up by year end. I think it's quite likely because of the increasing ascent as we rise into this parabolic advance, and considering we're already at 120K. But it's not something that I'm like ready to throw money on, right? I do think it's likely though, and hopefully that means that Bitcoin tops, we have a month or maybe two of alt season, a massive alt season, and hopefully we can wrap this up by year end. That would be perfect for me for tax reasons, but hey, that's not always necessarily, things don't always work out the way that we expect. So I'm open to the idea that it makes sense past that.
Yeah, I've always kind of had my mind on Q4. Just, historically, that's been when Bitcoin is topped in 2021, in 2017, even going all the way back to 2013, 14. It was kind of always, October, November, December, January of that 4-year kind of repetitive cycle. And I think that, the tax thing is a very apt point. I think a lot of people in the chat probably don't think of that, obviously. And if you're not thinking of that, hopefully you live somewhere like Dubai where it doesn't matter. But if you live in the rest of the world, it is actually something that you have to think about and you have to consider, especially when you start dealing with larger amounts of money. The tax planning becomes a super important part of when you're going to realize your gains. Do you have losses? Can you carry forward losses? Can you offset gains into a different year? It becomes a big thing because there's horror stories, obviously, I'm sure you know some of them too, where, someone has a crazy gain in a year, and then let's say that they had some crazy gain in 2025, and then in 2026, they round trip a bunch of that money. They don't realize enough of the profit. Now they have this huge tax liability and they don't have the money to pay it. The government doesn't care. So you do have to think that way, unfortunately, if you live in North America and most of Europe. So something to consider for some of you. Pay your taxes is highly advisable, and do tax planning, as annoying as it may be, because it is important. I agree, though, like we haven't seen that parabolic ascent on Bitcoin yet. I think the longer the consolidation takes, the higher Bitcoin goes, the better for the longevity of the cycle. Like, I would much rather Bitcoin to have another substantial leg and cause altcoins to fall behind or fall by the wayside, as you say, and Bitcoin dominance to rally again. Whether or not it makes a new all-time high, I don't think is irrelevant. It's just another rally in Bitcoin, I think, just prolongs how much time we have left. But to your point, this could be happening like next week. We could put in a $10,000 weekly candle. It's like, okay, here we go.
Yeah.
The timeline just got accelerated. So it is hard to, make those predictions. But I think the takeaway I've been trying to give people is there's still tons of opportunity. You still have time. But it's not just getting started. Like, I think that's something that people say on Twitter a lot is like the bull run's just started. It's like, dude, the bull run started a long time ago, like a very long time ago. It doesn't mean that you can't make money. And oftentimes the craziest gains come at the end of the bull run. And you're not out of time, but you're not early. Like, it's time to pay attention. If you've got money, if you've got dry powder, don't feel like you've missed out. You can't make any money. You can make a ton, but it is absolutely time to pay attention. Get into those altcoin charts. Look for those charts that look bottomed out, 90, 95% down. Now's time to start paying attention, because when Bitcoin makes that next leg, that timeline moves forward and you're going to want to be positioned. And if you're trying to kind of penny pinch right now because, Bitcoin might go back to 110,000, I think that's completely the wrong frame to be viewing the market through. Like, we're bullish. There's still a parabolic advance to come. There's still going to be a big appreciation in altcoins, but we're a lot closer to the end, in my opinion, than we are to the beginning.
Yeah, absolutely. And I think that's like key. Like, the Bitcoin bull cycle has been going on for years now. Like, this is not the start of it by any means. And I had, like, the other day, I had a friend or like an acquaintance text me and be like, hey man, like, have you seen Bitcoin? It broke 100K. And I was like, yep, I know. And he's like, oh man, I wish I bought it, like years ago when it was a lot lower. And I was like, yeah, dude, me too. And then he was like, do you think it can go like to 150 to 200K? And he just kept talking about Bitcoin. I wanted to like shake the guy and be like, bro, forget Bitcoin. Like, you missed the boat. Look at everything else, because there's money to be made here, but people get so caught up in like what is pumping today, what is already up 1,000, 10,000%. And they refuse to look at everything else that no one wants to talk about. And I get it, because for someone who's not like well-versed in this stuff and doesn't understand technical analysis and all these things, when Bitcoin is at 120K and CRV is at 40 cents, people are talking about Bitcoin. They're not talking about CRV. The general public doesn't notice the coins that are down there in the depths. They don't care about that. They care about the asset that's pumped 1,000% and that's all over the news. And so prevailing sentiment is like, get in on Bitcoin. It's pumping like crazy. And for someone who doesn't understand these things, that's all they see and hear. And so I get it from that extent, but you really got to focus. And this is like, this is true for investing, period. Like, if everyone's talking about the asset, you've probably missed the boat, or it's probably time to look at something else. You want to get in before the crowd. That's where the money is made. And most people don't understand that. And so even like when tech stocks were booming, the last few years, I had people talking about getting in on tech stocks and, hey, have you seen Apple today? Have you seen Amazon? And are you going to buy some? I just bought some. And it's like, guys, where were you, years ago when no one was talking about these things? Where were you when we were, 80% lower, right? That's when you should be paying attention. And so I think that's huge. Like, the Bitcoin bull run has been going on for years. You still have time to make a ton of money if you focus on the right assets right now. And the right asset to focus on is certainly not Bitcoin here when it's up, what is it, 60x from 2018 lows, right? 60x, is that right?
Yeah.
It is. That's like 50.
Yeah.
A lot of X, 40x, right? Like, that's crazy to say. But yeah, like, the time to buy Bitcoin was months and years ago. The time to buy alts, the right alts, is now. And you're not too late, but if you keep holding off and pulling the trigger because you want 10 cents lower, at some point you will be too late. So definitely start doing your research, put in some time and effort now. It will pay off multiples in the next few months.
Yeah, I think a lot of you guys who are locked in, you're watching these streams, you're on Twitter all day, you've got to remember, a lot of people on Twitter, the way they post is to induce FOMO. There is still time and there's still opportunity, but you need to be paying attention and you need to start taking action. You can't be scared. Bitcoin going up is a good thing. And if you're positioned in the right coins, I think it's going to pay dividends over the coming months. I completely agree with Cred. Even if things go lower, even if altcoins have another leg down, some of these, many of them are going to be putting in higher lows structurally. Even if they pull back, they're going to pump 300%, and then they're going to dump 50 or 60%, but then they're going to put in a higher low. And there's going to be some phenomenal opportunities when we finally see that last parabolic ascent, which will raise everything, and then Bitcoin top out, which will give us that crazy, 30 to 90 days of mania on altcoins. So let's flip the switch a little bit. What do you think happens after this cycle? I mean, the US is in a weird place. The stock market is at all-time highs. I think a lot of people might argue that the U.S. economy is not at all-time highs. We've kind of been, treading the line of a recession. Inflation was super high. They still haven't cut rates, which hasn't even been factored into what could happen for crypto. Do you think that this is the last rally before a giga bear in stocks, in risk, in everything?
Yeah, unfortunately, yeah, I do. I think this is, I've made the comparison before in a YouTube video, this is like the roaring 20s before the Great Depression, in my opinion. What we've been seeing, I mean, we're seeing, even in traditional stock markets, if you want to know what a parabolic advance looks like, go to the SPX 500 chart and go look at that. That's a parabolic advance. You can just see that off of our lows in, 2008 coming out of that recession, it's basically been up only, and you can see that we're getting up only at a steeper and steeper rate. And that is the definition of a parabolic advance. This rate of ascent is getting increasingly more aggressive. And this is not healthy. This is what we call a blow off top. We are in the makings of a blow off top on the SPX, right? So obviously we can go a lot higher, and in parabolic advances, that last stretch of the parabola can go absolutely nuts. There's no telling how high it can get, but the outcome and what happens after is always the same, and that is a massive crash. And the more aggressive that this ascent is, the bigger the crash that follows will be, because it's almost like we need to go back to some level of equilibrium, and the further out of balance we get, the bigger the correction we need to get back to that state of equilibrium. So this parabolic advance in the traditional stock market has been in the makings for nearly 15 years now, which is a massive run. And it's like yin and yang. Like when we get such a rally, we're going to get an equal and opposite reaction. And this will be a correction that essentially corrects 15 years of a bull market, if not even longer. And so, yeah, I think, unfortunately, as exciting as things are getting now, we're going to have to deal with the consequences after this. And it seems like it may be, a coincidence or something maybe more that both the SPX and Bitcoin and crypto as a whole are going to be going parabolic and seeing blow off tops within the next possibly 6 to 12 months. And so both of them will likely be in a much larger secular bear market at the same time. Whether one is causing the other or whether this is just a coincidence and timing lining up, I can't say. But it does seem like we're basically headed in the same direction for both, which is a final last hurrah, a last massive run before a collapse across the board.
So something I've talked about on streams and videos is I could see Donald Trump basically doing everything in his power to continue to pump the stock market, which is seemingly what he's doing. Because when he inevitably, at the rate he's going, gets annihilated in the midterms, and then the Democrats, unless the Republicans pull something out of their ass in terms of favorability, because I think the Trump, not to get too political, but I think they've done a lot of damage to themselves with the tariff stuff, with the Epstein stuff, when they are doing some good things and some of the things he promised, but all the media attention seems to be on the wrong things. But he can leave his presidency going, well, I doubled the stock market. It was at 4,800 and, then it went to 9,000. So the rich got richer, right? Even though the average person, the buying power of their dollar got devalued massively. The average person doesn't have a ton of money in stocks. They're not getting that appreciation of the upside. It's actually hurting them. And then he doesn't care what happens after. He'll hang his hat on, hey, I doubled the stock market. What do you want from me? What do you do with your money? It's, I'm in my mid 30s. Like, so for my entire adult life, it's just been put your money in the stock market. Like, you know, doing well in crypto, great. But like in terms of excess cash into your retirement accounts, it's like you just buy the stock market. You literally buy the S&P 500 and you're going to outperform any mutual fund, most hedge funds, just by consistently buying the S&P 500. You'll beat inflation. What do? Like, I mean, your dollar risk assets potentially go into a bear market. Crypto potentially goes into a bear market. We may be going to a mega recession. The dollar's been, you know, inflated away to shit. What do you do with your money? How do you preserve value at that point?
Yeah, so that's a great question, and obviously one that I've thought about a ton, because my plan after cashing out of crypto is how do I preserve that wealth, and what's the best asset or asset class to invest in to make sure that, you know, ideally I don't lose purchasing power, but in a perfect world I gain even more through those investments. And it's super important. And I think, you know, like you said, there's this kind of accepted dogma that, hey, you just put your money in the stock market, it'll be worth more later. That's it, right? And I think a lot of people that even that I talk to that are not very savvy investors kind of have this idea that the stock market will go up forever, constantly, right? And we know better. We know that, you know, the stock market, just like every other market, is a series of boom and bust cycles. And yeah, maybe over the long term it has been going up significantly. But if you invest in something at the wrong time, it could be years, if not decades, before your value can reach the level at which you invest in. And a great example is, of course, the stock market back here in the 2000s. You know, during the dot-com bust. SPX was trading at 1,500 in the year 2000 after the dot-com boom. We then saw the dot-com bust. And it wasn't until essentially we kind of made equal highs here in 2007, 7 years later, but then we saw another massive crash. And it wasn't until 2013 that the SPX officially broke out of those old highs set in the year 2000. So 13 years later it took for the SPX to actually make new highs and continue on a rally. So if you bought, I mean, a lot of companies went bankrupt during the dot-com bust, but assuming that you got in on something that's still there, it might have taken you a decade to get back to that level, right? So the idea that you can just always throw your money in the SPX and it'll always be higher doesn't really account for these boom and bust cycles. And if you get caught at the wrong time throwing your money into something that's been going up for 15 years, like we're seeing now in the SPX, it could be, you know, 5, 10, 15 years plus before you actually recoup your investment. And so I was looking at alternative investments and came across commodities and did a little bit of research. I have to do a lot more, but the idea was that there's these commodities versus stock cycles that occur, and typically they alternate. So when risk on equities go on rallies, commodities tend to bleed, and then when there's a bear market in traditional stocks, you tend to see commodities rise. And so that got me interested in commodities, and I was looking at a select few, and I've obviously talked about uranium quite a bit on socials a couple of years ago. And there's value to be had elsewhere, like outside of traditional equities and outside of crypto. You just have to go looking for it. There's boom and bust cycles in everything, in every market in the world. And so if one market is undergoing a bust, it's not necessarily the case that every other market is undergoing a bust as well. And a good example, I mean, we saw, like, I've talked about uranium quite a bit, but just to give you guys an example, Cameco Corporation, which I believe is a Canadian stock, uranium stock, was trading at $7 in 2020. I've been talking about it since then. This was a chart that I marked up back in the day, and we're now trading at $79. It's gone up 10x in that time period. And there's a good fundamental thesis that surrounds the uranium stock market, and it's not necessarily the case that they will follow the equity bear cycle, because there's a fundamental thesis behind these stocks that suggests that they may continue to rally for years to come. And so there's other alternatives, especially in the commodity market. But it's going to take some research and time for me to find those myself, and of course for others to find those as well. But you just have to put in the time and effort. There's going to be something out there, I think, that'll make sense to invest in when we're seeing, you know, both a crypto and a stock bear market.
Yeah, like I think holding cash, as much as inflation sucks and the dollar's been devalued in a secular bear market, it's kind of like when crypto's been in its own little bear market. Like if you're holding cash and those risk assets, which you eventually want to buy back, are getting cheaper, as they go down, you're effectively short, right? You can end up buying more. So that's something as well. And then absolutely, I mean, there's a bull market somewhere always. There's always something going up, or there's an inverse bull market. You can be short some of these assets, but I do think that this last hurrah is going to be the end of the brain dead, buy every dip easy to make money kind of playbook that we've been in for, you know, the majority of my adult life. And part of me is annoyed by that because I'm like, man, I wish I was around and, you know, I was this financially literate and aware and had money, you know, 15 years ago, and I could have just bought every dip on the S&P knowing in a few years I'm going to double my money. It's going to be trickier, and I think it's going to catch a lot of people off guard. And you're going to see a lot of funds and financial advisors have some really bad years because the easiest advice to give anyone is like, oh yeah, have like an 80-20 equity to, you know, bond split, or maybe 60-40 when things are a little bit shakier, or maybe 50-50, and then you go back heavy on the equity, or you have some cash. It's going to be a different portfolio mix. It's going to be something we haven't seen in a very long time. There's going to be opportunity though, guys, but no different than trading crypto, trading altcoins. You know, if you're doing self-directed investing and you're managing your own money, it's going to be a little bit harder, I think, after this last, you know, kind of rally. And so I think the hope for everyone here is cash out as close as you can to the top. And then we see where the dust settles. We see what actually happens in America. You know, is there going to be a shift in the American markets in general, where it's like, hey, you know, all of a sudden, a lot of these other countries don't care as much about, you know, holding UST bills, about using the US dollar as the reserve currency. And does that, you know, fundamentally change what you do to preserve and grow your wealth? Is real estate going to still be a good investment? I still think real estate is a relatively good investment. I know some people have other opinions on that, but they're not making any more land. And as immigration numbers into Canada and US and places like that continue to exponentially increase, people need somewhere to live. So I'm doing the same thing. I'm trying to find those holes in the market where, you know, what could benefit and do well in a risk asset bear market. Also, I think cash flow is something that a lot of people don't think about because you're trading, you're making money. Investing in businesses, investing in things that can generate you monthly income, I think that's going to be super valuable as well. So this has been good, man. I don't know how much time you have. Do you want to do some questions from the chat and then wrap it up? It's up to you.
Yeah, sure. I have time, so we can take questions.
So, guys, let's do some questions from the chat. Let's not try and just like spam tickers. If it's more like questions about charting, if it's kind of more theory questions, stuff that I think will bring value to more people as opposed to just like, hey, look at my shitty altcoin. I mean, the views we're getting on this is crazy. We've got over 1,000 concurrent on YouTube. We've got, I mean, the Twitter views are like, I don't get how they work. It says 25,000 views. Obviously, I think that's like people who have clicked and engaged, but lots of people watching this right now. So I think people are eager for eager for this kind of info. I think I have too many coins. Is there a rule for that? Like, should you hold X amount of coins for X amount of money? I think that's a interesting question. You've got to be careful being too diversified in a industry where there's a lot of correlation between everything, right? Like if altcoins get wiped out across the board, most of them get smoked, some harder than others, but there's these assets are extremely correlated. So there is a world where you're too diversified and maybe you want to have a few more concentrated bets. I'm not saying you can't hold a bunch of coins, but I don't know what your thoughts are on that.
Yeah, I mean, I agree completely. I think like the reason that I've been talking about the same 5 coins for the last 5 years is because like I don't have the mental bandwidth to be tracking 20 different coins and keeping up with all the fundamental developments or lack thereof. And it's just like, if you spread yourself too thin, you're not going to catch anything. So focus on, you know, a few select coins. I don't think there's like a specific number where it's like, oh, you have more than 5, too much. Like, I don't think it's like that, but whatever you're mentally capable of keeping track with, you know, like I like to stick to, like, as far as spot holdings goes, like 5 to 6 coins. I've tried doing more than that. I've tried like diversifying and spreading out like 10% in like 10 different coins, but honestly, it's just not worth the headache trying to keep up with everything. And so now I just select a few alts that I have high confidence in, and I place big bets on those rather than, you know, trying to spread it thin. So when it comes to trading, you can trade anything that moves. And so my trading list is like maybe 20, 30 coins at any given time. But when it comes to like buying spot holds where you have to actually keep up with your investments and keep track of developments, it's hard to do too much. So I stick with like 5, 6, and everyone knows those because I've been talking about the same ones for 5 years. That hasn't changed. But yeah, I think that's kind of like my perspective on that.
Yeah, I feel the same way. You only have so much mental bandwidth to look at things and to keep up with things. So, if you're trading something on the high time frame and you're going to accumulate spot and you're going to hold it for a long time, I think there is such a thing as, over diversification. I think this is a good one. Someone wants to say, like, okay, pull up a fresh coin and, like, how would you go about marking it up? Like, okay, I just opened this altcoin. I want to determine if this might be a good buy. What is your kind of thought process from start to finish?
Sure.
And by the way, guys, Cred has a fantastic YouTube where tons of people are asking about what your 5 coins are. Go watch any of his YouTube videos over the last like 4 years. It's the same 5 coins every time. And a lot of these things that we're talking about here, he's, I feel the same way. Sometimes I feel like I'm just repeating the same thing every video, but sometimes that's what people need to hear.
Yeah, definitely. So, do you want to give me a random coin and I'll just pull up a chart and kind of talk about why I may or may not like what it looks like?
So, let's do one that's already pumped a lot. Let's do FARTCOIN because everyone loves FARTCOIN. And that coin's already, it's not 90% down. So let's start with this one maybe.
Okay, so I'm going to go to a clean chart so it doesn't have any markings. Let's see here. So the other trouble is with some of these coins like FARTCOIN that were born on DEX is you don't get all the price history all the time with the charts. So you have to find one that has all the price history. So this is a good example. Here's FARTCOIN, and I've covered this one on my Twitter. So this is actually a perfect example. So FARTCOIN, you can see I've labeled off like a clean 5-wave move off of its inception essentially, which tells me to expect a big correction. You can see that we corrected down to this zone here, which is like the consolidation that preceded our 3rd wave. So just off of looking at this chart, this red zone here is where I would like to have been a buyer, right? So I wasn't paying attention to FARTCOIN at the time, but any chart that you're looking at for these big areas of consolidation before the massive rises. And the deeper that we get, the better, obviously, because you have a better risk to reward for the move back up to the highs. So this would have been ideally where I would want to buy. So if someone suggests a chart, I'll take a look at it. If it's down in a zone like this, all of a sudden I'm interested. What do I do then? I look into the fundamentals to see if it makes sense to be buying spot. Does it have some sort of value besides being a meme? If it does, it's easier for me to make that decision. If it is a meme, but the technical setup is still good, then I may still be interested. So like with, for example, Dog with Hat hit a high of $5. And I basically said at some point, I shared a chart and I said, if it comes down to 50 to 80 cents, that's where I'd be a blind buyer just because I know it's a meme, but I also know that it may have some staying power in terms of memes. And so if it comes down to 50 to 70 cents, the risk reward there justifies buying it because it's down 90% from the highs. If I buy it, I know I could lose everything if it goes down to 0. But if it does happen to make new all-time highs, further down the cycle, I'll make a 10x. That to me is a reasonable risk to reward. So like on the same way for FARTCOIN here, I didn't buy the yellow zone, so I missed that. So now what am I looking for? I'm looking for the next area of interest. To me, that was this kind of zone that I marked off. You can see like this clear SR flip on the high time frames. And so if we were to dip back to that zone, which is this like green area of consolidation, once again, that's an area where I would be interested in buying it for a rally to all-time highs. Now, we never got that zone, and that's okay. That means I never bought any FARTCOIN. That means I didn't think that the risk reward justified it. I do think that we could certainly move back to prior all-time highs. And in fact, that's what I've been betting on. But I also feel like what comes after may be a little bit disappointing to some. Of course, market context does play a role here. And so if the entire market is rallying, it's a decent chance that maybe we don't get such a change in price action. But the reason that I have only interest in buying in green is because I'm aware that we could technically fall lower. Again, this is a coin that is primarily driven on attention. There's not much fundamental value. It is a meme coin that has maybe a lot of mind share. But again, when it comes to memes, mind share shifts so quickly. Like if you look at today, the top performing meme coins are coins that weren't here maybe a few months ago. And so for that reason, I'm very, very selective on when I buy these types of coins. And I'm always looking for a good risk to reward region where I think we could be seeing limited downside and significant upside.
So thank you for the explanation. I've got a coin here. Let's look at near. So near is something that is closer to the bottom still. So a lot of people say, okay, CRV looked really good 2 months ago, but it's already pumped up, a whole bunch. Whereas you look at something like near and you might say, okay, this is still a relatively bottomed out chart, I would say. I mean, obviously we had that rally in 2014, but this is still a 10x below its prior all-time high. How would you view something like this? Like, is this something where you're like, okay, this chart might be interesting to me? It had its huge rally, its huge retrace, and it seems to be still relatively bottomed out.
Yeah, so this is actually a great example of a chart that I would be interested in. And again, people like to comment about how shit charts look at the bottom, and I'm like, that's exactly why I like them, because that tells me that I have the most potential upside for the least potential risk. And so this is a great example. Yeah, Near has had a rally off of 84 cents up to a high of $9, a 10x rally, and now it has bled back down some 90% or so, or 80% or so. And so I'm looking at this as like, what was the consolidation that preceded that 10x rally? It was this chop between 287 and 87 cents. And so to me, that is the area of interest where I would expect accumulation to happen. And what we're seeing now is we're seeing support. We're seeing buyers step in. This is exactly what I'd like to see. And so to me, this is a good place to be a buyer if I like the fundamentals. And if I like the fundamentals, then in my opinion, this is a good place where we could find a bottom above the lows of that prior consolidation. And where would we be targeting? We'd be targeting the highs here initially. That's at $9. We're at 276. That means I can make $4 for every dollar I stand to lose. That to me is favorable risk reward. This is exactly the type of chart setup that I'm looking for. I'm looking for high time frame areas of accumulation. I'm looking for charts that are still down, 90+% from the highs, and it looks like Near is just down just about 90% from the highs. And I'm looking for structure like this that gives me a good risk reward ratio. So yeah, this is a great example. Now the next thing that I do is, now that I've established that this is a chart that from a technical perspective I'd be interested in, I would then go and look at their socials. I'd go into their Discord. I'd do a little bit of research on their tokenomics. I'd find out if I think that this coin actually has some sort of value, or whether it's something that is only surviving on attention, which could vanish at any point in time. If there's more than just attention holding this chart up, then that makes it a chart that I'd be willing to, or token that I'd be willing to buy at these levels.
So I know a lot of people are going to be like, well, how do you find these coins? Guys, I literally just scrolled through my watch list. And I just started clicking through coins. And it took me about 30 seconds. I could give you 5 other examples, like Sushi, very bottomed out still. AVAX, still relatively bottomed out. Like there's so many coins that it doesn't take very long. Arbitrum, very bottomed out. Like, this is not rocket science here, guys. It's looking at something like this where it's like, okay, it had a huge rally and a huge retrace. There's a lot of like XRP. While I still think XRP has opportunity, XRP is right at the highs. BNB just made new all-time highs. So where is the risk reward going to be the most optimal for you guys? And this is what both Cred and I have been saying this entire video. There's still tons of coins that look like this, which is shitty on the high time frame. That's good. The coins that look super good and are breaking through all-time highs, that likely means that the bulk of the move has already happened. It doesn't mean that they can't go higher, but the risk reward is not nearly as optimal.
Yeah, and like I just pulled up the AVAX chart, and if I hid the ticker, you would think that this is the Near chart, because they look almost identical, right?
Yeah,
it's exactly the same. And there's so many coins that are going to look like this, and again, it's just a matter of like risk reward, like you said. I mean, a great example is XRP. Now, XRP, I have a post on Twitter where I talked about how I bought, $10,000 worth at 18 cents, way down here. So I'm up right now on that position about 16x. To get a 16x on XRP from current levels, we'd have to go to $48, right? Like the odds of that happening for a coin that's at prior all-time highs is slim, right? You're going to get the best risk reward. You're going to get the best bang for your buck on coins that haven't yet rallied. I think that even if I think that XRP can go to 20 to 30 bucks, that's a 6x from here, right? I've already made an 18x. If it goes to 20 bucks or to 30 bucks, I will then be up over 100x. But you're not going to get the 50x's and the 100x's by buying something that is already pumped all the way off of its lows and is now hitting new all-time highs. You're going to get the 50x's and the 100x's by buying something that had a push to a very high level, but has now retraced 90%. And if it's going to see new all-time highs, you're already going to be up 5, 6, 7x. And then if it continues to pump from there, because of the state of the market, you might then be up 60, 70, 80x. So yeah, it's totally about looking for those coins that have not yet had their massive rallies. Let the treasury companies buy them at the highs. We're going to buy them at the lows before they get involved, and we're going to make a lot more money than they will.
Yeah, I mean, guys, there's literally so many coins that look like this, where maybe they're not down 95% anymore, but they're down 85, 90%, which means, yeah, they've 2x'd off of the most recent bottom, but on the high time frame, they're still very, very, very much beaten to shit. And a whiff, like literally a sneeze of attention, and some of these coins could do a 2 or 3x very, very quickly. I was talking about CRV, not as long as you, obviously, but a couple months ago, and people were like, why you like this coin? I was like, look, it just looks beat to shit. It's as low as it could possibly go on the weekly chart before invalidating its high time frame structure. The risk reward is the most optimal right here. And sure enough, a week later, it's now at 90 cents. People asking me, well, is now a good time to buy? So there's still lots of these coins that are very, very bottomed out. And to Cred's point, you got to do a little work, right? You have to go through. I know everyone said, what's your coins? What's on your watch list? Just go through all of them. Like, just literally go pull up the coin market cap chart, go by market cap, and just start looking at coins. What are coins that still have a lot of attention, there's still a lot of money in them, and just start clicking through. And so many of these charts, this is another chart. Again, looks very similar to AVAX and NEAR, doesn't it?
Yeah, it takes some groundwork. Like, you got to put in the time and the effort, but the opportunities are, I mean, there are tons of opportunities right now. You do need to put in the time to look through the coins, and you do need to put in the time to do your research, because the conviction to hold these coins to prior all-time highs, which is 5, 6, 7x higher in some cases, is only going to come if you've done the research and understand what you're holding, right? Like, it's very easy to say buy the bottom, sell the top, but the reality is to buy the bottom and to hold till the top. It takes a lot of conviction and understanding of what you're holding. Like XRP, I bought it at 18 cents. I'm still holding it. I mean, I'm sure there's hundreds, if not thousands, of people that bought at those same levels but didn't hold this long because they didn't understand what they were buying, or they didn't understand why they were buying it. And so somewhere along the way, some sort of FUD or some sort of news event happened, or something happened that essentially made them sell it because they weren't confident enough in holding till prior all-time highs. So buying low is the easy part, but you do need to have that conviction to hold to the highs, and that conviction will only come if you spend the time and the effort to understand what it is exactly that you are buying at the lows.
Yeah, and you gotta be willing to take the risk too, guys. Like, I think one of the issues many of you are having is with these coins that have already pumped, it's a lot harder to contextualize your risk. Whereas if you look at some of these coins that are still very well bottomed, like I've never heard of Origin Trail ever, but looking at this chart, it like the lowest it can go is 20 cents. Like below 20 cents, the whole chart is fucked. And it's only at 50 right now. And even to the most recent high, we're talking about over a 2 to 3x. You can now very easily contextualize your risk, saying for every one of these that I buy, I could lose 30 cents, but the upside is $1. That's over a 3 to 1, just to that local high. That makes it a whole lot easier to say, okay, if I'm going to put 50K into this thing, I know worst case scenario, I might lose $20,000, $30,000. Best case scenario, I've now got 200 grand instead of 50K. And you got to just be willing to take the risk. I think a lot of people struggle, and it's something that happens when you look at Bitcoin right now. Well, where do you buy Bitcoin? How high can it go? And where's my downside invalidation? Well, you could argue that Bitcoin technically still bullish all the way back into like the 70Ks. That's a long way down for a potential, 2x. Whereas something like this, you're getting a 2x just locally with very clear objective downside risk and huge potential upside. I mean, there's hundreds of coins that look like this. You just got to take the time, do the research, mark up the charts, and then be willing to put your balls on the table, and say, hey, if I'm wrong, I know where I'm wrong. That's as important as where you think the coin's going to go. It's just as important to know where that idea is invalidated. And once you're comfortable with that level, you already know the worst case scenario. Let's say you buy origin trail here, TRAC, right now, and your stop loss is, where Cred has put it here. Once you put that into your calculator and you say, okay, my maximum risk is 10K. What are you scared of now? You know exactly how much you can lose and you know what the potential upside is. Now it's just a matter of being patient and waiting, which is sometimes the hardest part for people.
Yeah, absolutely. And I've put the stop loss here at 0 kind of to make a point that that's the worst that can happen. Yeah, you could view this as like realistically, I don't think we'll see sub 13 or I don't think we'll see sub 20. But just to say worst case scenario, everything goes to shit and we go to 0. That's the absolute worst that can happen, right? And even at the absolute worst that can possibly happen, provided that this coin has some sort of fundamental value that suggests that it will survive long enough to benefit from the rising tide of the entire market. If we see all-time highs, the worst that can happen is you lose your money. The best that can happen is we make much more than 7x, which just gets us to prior all-time highs, right? So yeah, I agree completely. And you got to really, again, do your research to know that this makes sense buying. You need to measure your risk to know how much you're going to lose. And if you've done those two things, you should be comfortable. If you're not comfortable, it means you're risking too much. But if you're comfortable with the losses that can happen here if the coin goes to 0, which is the worst that can possibly happen, then you should feel comfortable positioning in some of these coins. And then once we're up, if you're really that concerned about your capital, once we're up 2x, you can always remove your capital from the position, which I personally don't recommend doing. That's another story for another time, but you can do that, and then you can ride the rest. Essentially, what they say on house money, right? You
Free
pull
roll
your investment out. Yeah, free rolling on at this point 5-10 positions. You pull your money out, you can then throw that into something else, and start a position there, and you can just kind of keep doing that. Not everything is going to move at the same time. You're going to get coins that take off first. You're going to get coins that take off second. You're going to get coins that take off 3 months from now. So you can do a little bit of rotating, keeping your tax implications in mind. But there's opportunity here. There's a lot of opportunity here across the board.
Yeah, I completely. This is literally how I bought Bitcoin, guys, by the way, at 3,000. If you go back in my Telegram to 2018 and my Twitter, I was like, okay, Bitcoin's at I think $4,000 at the time, $3,800. I'm like, the worst case scenario is it goes to 0. So for every single Bitcoin I buy right now, and I thought it was going to go at least to 40K, but the last all-time high was 20. My risk was $3,800 per Bitcoin I bought. This is the exact same calculation. I'm like, the worst case scenario is it goes to 0. I'm comfortable losing $3,800 per Bitcoin. All right, let's roll the dice. Because at the end of the day here, we are making educated gambles, right? This is like gambling, but with the ability to stack the deck in your favor and use risk reward and, give yourself higher odds. But as long as you're comfortable with the risk, it's going to make your life a whole lot easier. If you say, oh, I'm going to buy Trax right now, but if it goes to 0, I'm ruined, you're risking too much. But if you're comfortable saying, hey, if this position's wrong, I lose 10 grand, 20 grand, and the upside's 100 grand, that's a really good trade. So one last thing, and then I will let you go here. Guys, all you guys who are saying, hey, look at really pumped up coins. The whole point of what we're trying to make you guys see here is don't look at the coins that are already pumping super hard. That's not where the opportunity is. There's a lot less opportunity in XRP, BNB, BTC than there is in some of these other altcoins. Now, does that mean you can't trade those coins and make money? Of course you can. But we're talking about high time frame, spot positioning to capture eventually what we believe is going to be an alt season at some point in the next handful of months. You want to look at stuff that is still significantly down. I know you're like me. I'm not a big meme coin guy. I didn't do anything in the trenches, really. I didn't make any money. I lost money trying to, tail my friends on a few things. What are your thoughts on Pump Fun? I know that the coin launch has been, abysmal, at least from what everyone on the timeline is saying. I actually think that the amount of maximum FUD that we're seeing on Pump Fund right now, and the fact that they did raise a ton of money, I don't know, man. I think this thing could be bottoming out a little bit, actually, because everyone is shitting on it. And I think that they raised hundreds of millions of dollars. I know Bonk is eating some of their lunch. This is still a protocol that's making, tons and tons of money every day. Do you have any opinion on this, or you haven't been paying attention at all?
Yeah, so I haven't been paying much attention, to be honest. So it's my first time actually looking at the chart here, and That is pretty a pretty gnarly drop from the highs. So yeah, I don't know anything about the tokenomics or any of the fundamentals, so it's hard for me to have an opinion like fundamentally long term. But I'll just say like short term, just to give you guys an idea of how you look at this. You can kind of mark this off as like the first area of resistance, significant resistance being this area of supply. We can see that we have put in a low here. We can see that we deviated below the low. We consolidated a bit. We took these lows here, and then we pushed to the upside and broke market structure. So what this looks like to me is at the very least, a temporary rally to about the area of supply here. And so I would approach this from like a trading perspective and say, well, it looks good for potential rally up here. And essentially what we have here then is a range, right? We're bracketing here in this range. And then what happens from here, I think the fundamentals and everything will play a bigger role. Do the tokenomics support higher prices? Is Pump Fund doing something that suggests that the price should go higher? If it is, then maybe this was the bottom and maybe we do reverse from here. If not, then maybe this move to the range highs is just some more chop seeking liquidity. And we see a deviation, then we continue to bleed. But that's kind of how I approach this. And maybe initial starter position, take profits into red. And then again, based on the fundamentals, is there something that tells me that Pump Fund should participate in the rally that is to come over the next 6 months? Are they doing something to suggest that the price should continue to go higher? Or are the tokenomics so bad, and was this just one final extraction that suggests that we should continue to bleed on, for the next 6 months? That's where the kind of the fundamentals come into play. But yeah, that's how I'd approach this chart. And then the fundamentals would determine if I hold on to it longer or if I simply treat it as a trade.
Yeah, I don't even think they've released like what they're doing with the airdrop and stuff for another couple of days. One thing that I hate is the people have kind of co-opted the term extract. Oh, Pump Fund's extracting. Like, no one is forcing you guys to use any of these protocols. Like, these guys offer a service. You know what the fees are. If you choose to use it, they're not extracting that money from you. They're running a very, very profitable business, and it's making money. Whether or not they put that money back into the ecosystem or not doesn't mean they're extracting it. You're using it. This goes for all products. Like, just because Hyperliquid is using their token or their revenue to buy back the token, at the end of the day, they're running a business. All of these companies are for-profit businesses. So I just always think that that's very funny. But I agree on Pump Fund. I think there's a potential long trade here forming. How high it goes, I don't know. And I also know nothing about the tokenomics or really any sort of depth of analysis on how much market share they have. Are there, people are saying that they're making less money than they were. It's trending the wrong way. The guy's made hundreds of millions of dollars. I'd say it's a pretty successful business for him. Whether or not it's helped the community and a bunch of people have sent their money to die on Pump Fund, at the end of the day, that was your guys' decision to trade there. But I think that this is a good place to wrap it up. So I'll just kind of summarize here, guys. We don't think it's over. We still think Bitcoin is going to go higher, and we're going to begin this parabolic ascent, whether it's from here or after another wipeout lower. The top is not in. It's still a good time to remain bullish. Alt season, we don't believe has happened yet. There's still going to be a crazy period of time where Bitcoin dominance dies. What we've seen is Bitcoin dominance pull back. It hasn't died yet. Big green arrow for illustration. But we've only seen Bitcoin dominance pull back. We haven't seen it crash yet. These are all good signs. There's still hundreds, if not thousands of altcoins that have charts that are at the bottom. 80 to 90, 95% down off the top. So instead of looking at the stuff that's already pumped a lot, there's still a lot of stuff that hasn't pumped yet and still could with very favorable risk rewards. Lastly, as much as we're bullish here, this is not the early cycle. We are in what I would call the end game. Does that mean it's ending next week? No, but we are in the final part of the market cycle, in my opinion, and I think Cred would agree, which is there's tons of opportunity, tons of money to be made. You should be paying attention. You should be locking the fuck in right now. But if you're just saying, hey, now's a good time to invest in crypto for the next 5 years, that ship has sailed. This is like, hey, let's make as much money as humanly possible over the next 3, 6, 12 months. And then let's see where the dust settles. Things are going to get crazier than they have. I think you're going to see some crazy companies buy into crypto. You're going to see some crazy announcements from the US government that's going to be good for us in the short to medium term. Pay attention now, lock the fuck in. There's still tons of opportunity to make money, but also start, like, at least know where the door is. I'm not saying you need to exit, but you should know where the exit is, and you should have some kind of a plan of what you're going to do when that happens.
Yeah, to just sum it up, agree with everything you're saying. And guys, this is it. Like, this is, like you said, this is the end game. Like, this is what we've spent hours and days and months preparing for. This is it. So lock in. Like, I've already sacrificed a lot over the last few years to get to this point, to have the knowledge to play this the right way. And it can get tough, but I remind myself that we are in the final innings here. Like, this is where all that time and effort will pay off. And so lock in, make some sacrifices if you need to really focus right now, because this is it. We make our money here, we cash out, we pay our taxes, we ride off into the sunset for potentially another 5+ years of a bear market. So make the most of this. You haven't spent years leading up to this to slack off now. So focus, lock in, guys. Let's make our money here. And yeah.
Awesome, dude. Thanks so much for coming on as always. And maybe we'll do another one of these in 6 months, and maybe that's at the top. Maybe that's close to the top. But I think if you've watched this video, there's a ton of alpha here, and there's a ton of hopium. Like, there's time to make money. So lock the fuck in. Watch Credible's videos that he's posting on YouTube. They're great. Make sure you're staying focused. I know it's summer and the weather's nice outside, but you could set yourself up for the rest of your life in the next few months. And that's going to be absolutely worth it, because then you could have all the summers off going forward. So pay attention, lock in. We'll absolutely be back. Thanks for tuning in, guys. As always, check out all of the bullshit in the description. Like, comment, subscribe, share this around. We have over 30,000 views on Twitter. This is more than anyone I've seen who's streamed on Twitter in recent memory. And we have like over 1,000 concurrent on YouTube. So fantastic to see you guys all out here excited. And we'll be back soon, guys. All right. Signing off. See you later.